I'm Sergey Gerasimovich, entrepreneur, CEO and co-founder at Easy Blockchain. How to determine the right time to exit cryptocurrency position, the importance of market analysis and forecasting. If you're buying crypto and want to know if it's possible to forecast the market, you need to watch this video. Is it possible to forecast the cryptocurrency market? Forecasting the cryptocurrency market is complicated. It's like trying to forecast what's the weather going to be next year at the same time. No one really knows. It's very difficult to determine the prices of cryptocurrencies, but it's easier to see how to choose winners and losers. For example, Bitcoin is half of cryptocurrency market. It is talked about on every news outlet. We do have a Bitcoin ETF, so it's more likely that this asset is safer, even though it's still very risky, and also it is very well known. We do have a Bitcoin ETF approved, so it's more likely this asset is safer, even though it's still a very volatile asset. Ethereum, also a very well-known cryptocurrency that has been around for a very long time, and it's been rumored that the ETF for Ethereum going to be approved at some point soon. However, this is not enough. When you invest in cryptocurrency markets, there is a risk of investment disappearing completely. And that's what you always have to keep in mind. Because you may buy some type of cryptocurrency and not only it will go down, it may completely vanish. The difference between investing in stock market and cryptocurrency market is that when the stock of particular company is traded on NASDAQ or NYSE or any other type of exchange, it goes through a thorough review of SEC. So there is a governmental-backed independent agency that actually checks the books, legal structure, it checks everything about the company. So that gives the investors a little bit more comfort about the company to be legit. In a cryptocurrency, on the other hand, anyone can create a coin and sell it online. Me and you can create an audience for a coin tomorrow, and we can start trading between each other. But it doesn't mean that the asset has value. So you always have to be aware. You have to do your own research. Here's a couple of tips how to read a good market. The most important thing to note is interest rates. In my opinion, that's a crucial part that triggers bull markets or bear markets in cryptocurrency. Why is that? When the interest rates are high, you can invest your money in any safe assets. You can buy bonds, you can open saving accounts, you can buy treasuries and make 4 or 5% a year. With the current interest rates over 5%, that makes very high returns. That's why investors are less likely to invest in risky assets such as cryptocurrencies during the high interest rates. So when the interest rates go down and the interest rates are very low, investors cannot buy those treasuries and make traditional high yield returns. They are looking for something riskier that will bring them the same high returns they've got accustomed to. That's where cryptocurrency comes in. Let's dive into the bull market more. The bull market is a term used to describe a financial market where the prices of one particular underlying asset goes up, or the whole market itself goes up. It is often used in the stock market, and as a rule, the bull market starts when there is a 20% gain in the particular asset class. So, this type of definition doesn't really apply to cryptocurrency because the swings could be 20% every day. But if that happens for a month or two, things are going up over a longer period of time. That's when we label a bull market in cryptocurrency. If you already have had an experience with the bull market, tell me about this in the comments below. How do you do your research? You read articles, you read the coverage, you see the founders of the company, you check if the token is actually used, you see which exchanges it's being traded on. If it's traded on some exchange somewhere overseas that you never heard about, that's probably a bad thing. So you have to be very careful. But if it's traded on Coinbase, that's a legit platform that most Americans use. One of the important questions we need to answer, when is the right time to take an exit from the cryptocurrency position? It all depends on the strategy, I know. Every time you make a decision to try to get a return on investment, you need to have a strategy. For example, if you buy the shoes, you want to know which shoes are the best. Are they waterproof? Are they leather shoes? Are they flip-flops? Or the ski boots, right? You're not going to buy flip-flops and wear them during the winter. Same here. It's that simple. You need to understand what type of investment you're going to make. Do you want a 3% return or do you want a 100% return? If you want a 3% return, you should just go and open a CD account with your bank. put your money there and forget about it. Or you could open a savings account. A lot of savings accounts nowadays offer 4 to 5% because of the interest rates are so high. Cryptocurrency is not that. Cryptocurrency is the high risk, high reward investment. You will lose all your money, but at the same time, you may make 5x or 10x on your investment. So what is the right way to exit your position? You have to identify the strategy, and most importantly, you have to follow it. If you make the goal that you'll exit when you have 20% return on the asset, that's when you exit. If you decide that you want 2x or 3x or more on your investment, when it hits that, you exit. Don't start being emotional about it, saying, well, I just made 2x, I'll probably wait, I'm gonna make 5x, I'm gonna make more money. You might, but you might just lose everything. Cryptocurrency is very risky. Those coins that they say can get 10x or 20x or 30x, they are not legit. They are usually just pump and dump schemes, but people do invest in them. I would encourage you to have a strategy and follow it. No one really knows if and when cryptocurrency market is going to go up or down. If they say they do, they're lying. But I can tell there are some important correlations to pay attention to. Keep watching this video and be sure to subscribe for more crypto investment hacks. The problem with cryptocurrency investment is that when you do it once, it's very hard to stop doing it. It's like a drug, because the returns can be so crazy. You can read online that someone made 100x or 200x on their investment, bought Pepe, another one Dogecoin, someone else bought some cat coin and made millions. So it's very tempting to think that you can easily have the same success. But at the end of the day, you have to understand that there are millions of people who lost money. Cryptocurrency investment is very risky. You do not really want to invest money in something that you do not understand. You do not want to lose your hard-earned money that easily. So you do your due diligence by reading online through different platforms, through information about the token. You have to check who the founders are and what's the utility of the token. Do you want to know the truth? The one that will help you to create more reasonable results in cryptocurrency investment? Here it is. Each strategy is different for every user. There's no perfect exit time. There's not one rule on how to exit, because it really depends on what your goals are. If your goal is to become very, very rich, then your exit strategy from cryptocurrency will be focused on a very long term. When it's short term, then you just want to make a quick gain, it's different strategy. But at the end of the day, the advice for every investor is different. Investors should plan what is the perfect outcome for them is. I hope this video cleared up how exit strategies in the crypto world work. Thanks for watching and see you soon.